Friend, welcome to the Company Law Adjudication and Appeal Series. Today we are discussing latest NFRA order dated 12th April 2024 imposing penalty on the statutory auditor firms and auditor. That is the total penalty imposed here is the 4.5 crore, 3 crore on the audit firm and 1 crore on the one of the partner and 50 lakh on the other partner, and total penalty amounting 4.5 crore imposed on the CF firm and partners, and debarring one partner from practice for 10 years and another partner for 5 years. Let's see the orders of the copy. Order under section 132 subsection 4 of the Companies Act in respect of the auditor's name, Partnes HD and Associates, the audit firm, and 2 of the member engagement partner and other engagement quality control review partner. This order disposes the so cause notice dated 25th July 2023 issued to the audit firms and the partners. Here let's see the executive summary of the case. Reliance Capital Limited, a company listed on the BSE, engaged in the financial services but jointly audited by the PwC and PSD. Here is the Partnes ADA and Associates short for the financial year 2018-19. The Director General of Corporate Affairs, MCA and Government of India, letter dated 29th May 2020, informed the National Financial Reporting Authority that the PwC has resigned from the audit without issuing the audit report for the financial year 2018-19 and filed a report to the MCA under section 143 subsection 12 of the Companies Act. On examination of this matter, it was found that the ex-auditor PwC had filed Form ADT 4 with the MCA reporting suspected fraud in the Reliance Capital Limited. The audit report for the financial 18-19 issued by the new auditor PSD stated that there was no matter attracting section 143 subsection 12. Hence, be sure moto examine the audit file of the PSD also under section 132 and observe prima facie that there are certain non-compliances with the standard of the auditing and code of ethics issued by the ICA. Accordingly, on satisfaction that the sufficient cause exists to initiate action under section 132 subsection 4 of the Act, subject to the matter under so called notice was issued to the auditor. And here we are discussing the findings of the this case. The major violation discussed in this order that the first, while PSD was functioning as a joint auditor, PwC or the other joint auditor brought some significant matter to the PSD notice, though various communication are stating from the from letters, and these matters included potentially irrecoverable loans and investment amounting to approximately 12,571 crore to group companies portrayed as recoverable. However, PSD failed to carry out any independent procedure on these matters and discharge the responsibility of joint auditor in this regard. And second, PSD indulged in self-review by the preparing material information for the financial statement of the company, which subsequently became the subject matter of their audit opinion and thus violated the code of ethics and essay. PSD used the emphasis of matter in its audit report, in which it concluded that there were no matter attracting section 143 clause 12. The EOM para was in non-compliance with the audit standard and was misleading for the user of the financial statement. PSD conducted without any regard to the merits of the transaction that there was no matter attracting section 143 clause 12, despite the evidence of document irregularities in the RCL. EP did not question the management. In the absence of the test and evidence, the recoverability of the loans of 6,557 crore net of the impairment disclosed in the financial statement was doubtful, and hence the management assertion of the value and right of these loans were materially misstated in the financial statement. And Next, PSD failed to notice that the loans amounting to 6,557 crore were sanctioned by RCL while violating its lending policy, and also failed to examine the fraud risk factor. It failed to identify and respond appropriately to the risk of the material misstatement due to fraud in management override of the controls and revenue, and PSG failed to evaluate the adequacy of the expected credit loss provision of the 2,577 crore on loans. This has resulted in the non-reporting of the material misstatement in the financial statement, and on the basis of investigation and proceeding, after giving the auditor adequate opportunity to present their case, we find the auditors guilty of professional misconduct and imposes through this order following monetary penalties and sanction, that is the imposition of monetary penalty of 3 crore on the audit firms, and imposition of the monetary penalty of the 1 crore on the engagement partner and other partner 50 lakh on the other partner, and in addition to one partner, engagement partner, debar for the 10 years and other partner debar for the 5 years respectively from being appointed in the auditor or internal auditor, or from undertaking any audit in respect of financial statement or internal audit of the financial function and activities of any company or body corporate. Thank you so much for watching this update. You may refer the order copy from the NFRA website. Thank you so much.